Natural disasters have created a difficult market for property insurance for coastal states. In these exclusive interviews with Insurance Journal's Ken St. Onge at the recent NAIC meeting in National Harbor, Maryland, he talks with some commissioners and discusses the current market trends.
We're cautiously optimistic, and fortunately we have been blessed this year with a relatively mild hurricane season. A couple of them came close calls, but we have yet, I think, gotten through another hurricane season. And as we get through the season, a couple of seasons behind us, we see a softening in the reinsurance market, and hopefully the combination of the efforts that we've done to rebuild the marketplace, strengthen the Florida Hurricane Catastrophe Fund, and having mild seasons and softening of the reinsurance market, that we are on the mend with regard to our property market.
The issue for us was finding property and casualty insurance that was affordable, getting claims paid that existed from Katrina, and trying to stabilize the market and put some predictability back into it. And I took over at a time when lawsuits were very prevalent in the tort market on the Gulf Coast, when insurance companies were being put out as being very, very bad corporate citizens. So the real charge as insurance commissioner is simple. If you're the insurance commissioner for the state of Mississippi, your charge is to make sure you have a viable market, that the company is all right to make a profit, but yet if you make an error, you err on the side of the consumer. The consumer has to be protected from exorbitant rates. Rates have to be fair. Companies still need to make a profit, but you've got to have a viable market.
The good news is that we have a very stable marketplace. We have lots of companies, lots of competition, many folks who want to do business in Maine. Our rates are some of the lowest in the country. Our companies are doing well financially, profitable, so it's a big success story.
In Wisconsin, we have a very competitive market, one of the most competitive in the nation between housing and auto. And our major players are really American Family, State Farm, Allstate. You know, I always look to, I hate to say it, but we'll look to the Minnesota bridge collapse, and you pull really the companies that were involved with those autos there, and you hit 70% of the market with those three companies.
If I believe the reports I see in trade journals like yours, the market's very soft. Now, the events of last week might change that. The P&C commercial marketplace, if you believe what I read, those trade journals, it's been decreasing, premiums have been decreasing at a rate of 10, 15% for quite a long period of time now. So we've been in a sustained soft cycle in the market. And we all know that these markets are cyclical, that eventually they turn around and they will harden and pricing will firm. I don't know if the events of last week will have anything to do with that or not. Some suggest it will. We'll have to see.